We need to talk about what just happened in 2025, because while everyone's arguing about triple-digit predictions that didn't materialize, they're completely missing the massive structural shifts that actually occurred. XRP started the year at $2.13. It's ending at $1.84. On the surface, that looks like failure, but underneath, we witnessed the most significant regulatory and institutional transformation in crypto history. And if you're focused on daily price action instead of the infrastructure being built, you're about to get left behind in 2026. Happy New Year, everyone. Let's cut through the noise and talk about what actually matters. Before we go further, the disclaimer: I'm not a financial advisor. This is my opinion and analysis only, not financial advice. Always do your own due diligence before investing. This video is for educational and entertainment purposes only. Also, critical reminder, I will never contact you on social media asking you to sign up for anything, join signal groups, or any of that nonsense. There are multiple fake accounts impersonating me. I only have official presence on YouTube, Twitter, which is linked on this channel, and our Telegram group. I'm not on Facebook, Instagram, or TikTok. Be extremely careful out there. Now let's address the elephant in the room, the triple-digit predictions. Last night, everyone was talking about how we didn't see triple-digit XRP by year-end. The predictions ranged from $115 to $184. Currently, XRP sits at $1.84. I'm done discussing this controversy and the personalities generating millions of views talking about unrealistic targets. It's distracting from what actually matters. The noise around price predictions drowns out the signal of real developments. So we're putting that to bed. We're moving forward, focused on substance, not speculation. But before we do, I need you to smash that like button for the new year. We haven't hit 1,000 likes on videos in a while, and I think we can get there for this reflection piece. I know many of you are still recovering from New Year's celebrations. If your head hurts, feel free to turn the volume down a bit. No judgment here. Let's reflect on where we actually were versus where we ended up, because the narrative is far more complex than price charts suggest. 2025 started with momentum. We came off November and December of 2024 when XRP had significant runs. On January 1st, XRP traded around $2.13, not far from where we are now. Then we had that January surge where we reached $2.91. But after that, brutal sell-offs, absolute chaos. We had one day where XRP crashed all the way down to $1.76. People forget that the first half of 2025 outside of January wasn't good for XRP or the broader crypto market. We had essentially one solid month in July, and then everything that came after. But here's what changed structurally. We started 2025 still fighting the SEC lawsuit. The appeal hadn't been removed yet. We ended the year with spot XRP ETFs trading, no SEC lawsuit, regulatory clarity emerging. We also got Solana, Hedera, and Litecoin ETFs approved. We got crypto index holdings with multiple assets. This is massive foundational progress that sets the stage for institutional adoption. And potentially, this is critical. US lawmakers are expected to advance crypto market structure legislation in early January of 2026. The Genius Act already passed. We don't have the Clarity Act yet, but that could come soon. January 15th is shaping up as a potential turning point. The Senate Banking Committee has officially scheduled that date for markup of long-awaited crypto market structure legislation. Now, the government shutdown and associated chaos may have delayed some timelines, but the momentum is undeniable. Let's officially declare it. The 4-year cycle is over. The first signal should have been Bitcoin hitting new all-time highs before the halving. That was the canary in the coal mine. What's interesting though, Bitcoin's high for this cycle so far occurred on October 6th, which was exactly the date predicted by 4-year cycle theorists. The cycle didn't play out as expected, but that specific date marked the peak. Curious, right? It smells a bit like manipulation. But we have plenty of pundits and so-called experts still insisting that Q1 of 2026 will be explosive for crypto markets. Tom Lee recently pointed out that silver went parabolic last month, gold went parabolic over the past year, and historically gold movements lead crypto. His argument, if these massive commodity markets are making such moves, how can anyone be skeptical of digital assets in 2026? The current state of digital asset markets, the community, the infrastructure, the regulatory landscape is completely different than 6 months ago, 1 year ago, or 2 years ago. Prices are higher than 2 years ago, absolutely, but we didn't get the parabolic run-up many hoped for. Consider this comparison. Bitcoin in March of 2020 sold off because of the pandemic panic. Before that, in February, Bitcoin traded around $10,000. Let's use that as the baseline. Bitcoin ended up doing approximately 600% gains over 340 days from 2022 to 2021. If we look at where we were in August of 2024 and measure to now, Bitcoin has done roughly 100%, previous cycle 600%, this cycle 100%. I understand why people are frustrated. If we were at $50,000 and expected similar performance to the last cycle, Bitcoin should be around $250,000 to $300,000 right now. That was my prediction. If we followed historical patterns, it hasn't happened. And because Bitcoin usually front runs the market and then money flows into altcoins, the entire crypto ecosystem suffered. The theory hasn't played out yet. Maybe this cycle is fundamentally different. We already know it is in many ways. Before we continue, drop a comment with your predictions for XRP in Q1 of 2026. And if you haven't subscribed yet, hit that button and turn on notifications so you never miss critical updates. Today quotes big news is the ETF paradox. Usually when $1 billion flows into an asset, the price rockets. Yet XRP is currently testing the $1.87 support level. Why? Institutional velocity. XRP is now officially the fastest crypto spot ETF to reach $1 billion in AUM, assets under management, since Ethereum. The structural hedge. Data from Soso Value shows that institutional investors aren't trading these ETFs, they are treating them as a portfolio hedge. We are seeing 0 days of net outflows since the debut. The headwind on-chain analysis from this morning shows legacy wallets held for 5+ years, are distributing into this new institutional liquidity. We are essentially watching a changing of the guard, where long-term retail is selling to the new institutional class. The 4-year cycle is dead, but a new utility cycle is beginning. Supply shock. The burn mechanism is accelerating as Ripple's RLUSD stablecoin gains traction. Corporate treasuries. Trident Digital and Vivo Power have already moved hundreds of millions into XRP, the millionaire maker narrative. Institutional managers are now calling XRP foundational for cross-border settlement. If you are frustrated by the price action today, remember, price is a lagging indicator of utility. The utility is being built in Luxembourg, in the Senate, and in the ETF vaults of Wall Street. Stay vigilant, keep your eyes on the $1.98 trigger, and don't let the short-term noise shake you out of a long-term structural shift. While price disappointed, infrastructure advanced dramatically, and infrastructure is what actually matters for long-term value. We discussed in previous videos why 1000 XRP represents a critical threshold. That number isn't arbitrary. It's based on the mathematics of liquidity needed for institutional settlement. Think about what's required for XRP to function as the bridge asset for global cross-border payments. If banks need to move $1 billion and XRP trades at $1, they need 1 billion tokens. But if only 100 million are available on exchanges, they have to bid the price up dramatically just to complete the transaction. At higher valuations, say $100 per XRP, that same billion-dollar transfer only requires 10 million tokens. At $500, they only need 2 million tokens. The system becomes more stable and efficient as price increases. This is why the current accumulation phase is so critical. Institutional players are positioning now before retail awareness catches up. We're seeing corporations file for XRP treasury allocations. Trident Digital with $500 million, Webverse International with $300 million, Vivo Power with $121 million. These aren't small players making speculative bets. These are institutions positioning for the future of finance. Every dollar of institutional inflow into spot ETFs requires actual XRP purchases that get locked in custody. This creates permanent supply removal. And with the burn mechanism destroying small amounts of XRP with every transaction, we're moving toward a supply shock scenario. The Clarity Act could be the catalyst that changes everything. A representative from Franklin Templeton recently appeared on Paul Barron's show discussing this. She explained that once the Clarity Act passes, traditional investment products can integrate into the wallet-based crypto ecosystem. That means diversification of crypto holdings across institutional portfolios. She thinks the sky's the limit once this legislation is in place. This isn't about retail speculation anymore. This is about pension funds, endowments, sovereign wealth funds, and family offices getting regulatory permission to allocate to digital assets. And when that happens, the available supply of XRP accessible at reasonable prices evaporates. We've seen this pattern with Bitcoin. It used to be for hobbyists and tech enthusiasts. Now it's for BlackRock and Fidelity. XRP is following the same trajectory, except with direct utility that Bitcoin doesn't focus on. Bitcoin is digital gold, a store of value. XRP is digital oil, the lubricant that makes the global financial system move. The difference is critical. Store of value assets can sit idle. Utility assets need to be in constant motion, which creates functional scarcity on top of fixed supply. Something interesting happened on New Year's Eve. The Fed injected $75 billion into banks, the biggest liquidity flood since the pandemic. This was backed by $31 billion in treasuries. This isn't officially QE. It's not technically a bailout, but it proves the system still needs emergency support just to function. Something might be about to crack. We saw a major injection a few weeks ago. Now we're seeing an even bigger one. When you look at the data, the pattern is unmistakable. The traditional financial system is under stress. This is exactly the environment where neutral, decentralized bridge assets become valuable. When banks don't trust each other's currencies, when government debt instruments lose credibility, what serves as collateral? What facilitates settlement? XRP was designed for precisely this scenario. Quick but important note for our UK viewers, and you're our second largest audience, the UK has officially begun a crackdown on crypto tax evasion. If you've been doing creative accounting with your crypto holdings, that window is closing. Talk to a qualified tax professional immediately. Understand your tax liabilities in your jurisdiction. I learned this the hard way. I tried handling some tax situations myself early on. Now I work with professionals who know things I would never have considered. A good tax accountant is worth every penny you pay them. They often save you far more than they cost. This applies regardless of where you live. Tax compliance isn't optional, and the penalties for getting it wrong can be severe. Tom Lee recently mentioned potential stock market volatility in 2026, a possible sell-off followed by a significant run-up. This aligns with the broader macro picture we're seeing. 2026 is going to be confusing. If someone had asked you at the beginning of 2025 what you expected, would you have predicted sell-offs in April due to tariff concerns? Would you have anticipated October being the peak for Bitcoin despite cycle theory suggesting otherwise? The unexpected is becoming normal, which is why focusing on fundamentals, infrastructure, regulation, institutional adoption matters more than short-term price predictions. I mentioned earlier that people predicted triple-digit XRP by year-end. It didn't happen. I don't know what XRP's price will be today, tomorrow, or next week. Anyone claiming they do is either lying or delusional. But I do know this: the infrastructure for institutional adoption is being built right now. The regulatory frameworks are emerging. The supply dynamics are becoming increasingly favorable for scarcity. One more time before we close, smash that like button if this year in review provided value. Comment your biggest takeaway from 2025 and your expectations for 2026. And subscribe if you want analysis that goes beyond surface level price predictions. Right now, the crypto market is dead flat. There's no action, no volume, nothing happening. Even for someone who dabbles in short-term trades and day trading, there's literally nothing to work with. But this is expected. It's the day after New Year's. People are still recovering from celebrations. Many are taking extended time off, maybe Thursday and Friday, to make a long weekend, possibly even 2 weeks when you factor in Christmas. I think once we hit Monday, January 6th or 7th, we'll see people returning to work, coming out of vacation mode, bringing their focus back to markets. That's when we'll likely see volatility return. The calm before the storm, if you will. Let's zoom out and connect everything we've discussed. 2025 gave us regulatory clarity, institutional infrastructure, and ETF approvals. It didn't give us the price appreciation many expected, but which matters more for long-term success. Price follows infrastructure, not the other way around. We talked about why 500 XRP might become inaccessible to most people, why 1000 XRP represents a critical threshold, why the escrow system actually provides stability rather than suppression. We discussed how the BRICS nations need a neutral settlement asset, how trapped liquidity in the Nostro-Vostro system creates demand for efficient alternatives, and how the burn mechanism creates functional scarcity. All of these factors converge toward the same conclusion. XRP is being positioned as critical financial infrastructure, not as a speculative trading token. The institutions understand this. The regulatory bodies understand this. The question is whether retail investors will understand it before the opportunity window closes. I want to close with this perspective. 2025 was a building year, not a harvest year. We laid foundations that will support massive growth, but that growth requires patience. The people who sold XRP during the SEC lawsuit because they were scared missed the regulatory clarity that followed. The people who sell now because price hasn't pumped will miss the institutional adoption phase. The pattern is consistent throughout financial history. The biggest opportunities go to those who position during boring, frustrating accumulation periods, not to those who chase after moves have already happened. I don't know if Q1 of 2026 will be explosive like some predict. I don't know if we'll see triple digits this year or next year or ever. What I know is that the infrastructure being built is real, the institutional interest is real, and the supply dynamics are increasingly favorable. Your job isn't to predict exact prices on exact dates. Your job is to understand the structural shifts happening, position accordingly, and have the conviction to hold through volatility. Thank you for being part of this community through 2025. Thank you for the engagement, the comments, the constructive discussions. I've got some things brewing that I'll update you on in future videos. It's going to be a fascinating year. If you haven't yet, subscribe to the channel and ring the notification bell. Check out the links in the description for our partners and ways to support the channel. Thanks for watching, and I'll see you in the next one.